Good evening, everyone. I'm just going to do a quick video. There's been a lot of information going back and forth on an announcement that was made a few weeks ago, probably maybe even up to a month ago, that during the first quarter of 2015-2016 for the fiscal year end for the government's cycle, that they actually showed a $5 billion surplus. Now, nothing's been said by the NDP or Liberal Party on it, but I wanted to highlight a couple things that bear in mind when we were talking about the surplus statements. Okay, the government of Canada basically, in terms of its overall process, it collects revenue every month from filers, and that's to do with how we file for income tax, GST, corporate taxes, installments. That's all part of the filings when they're looking at things, as well as what they're paying out in terms of expenses. Okay, it doesn't give you the complete picture, but it gives you a good trajectory of where they think they're going to end up. Now, part of that $5 billion had a couple things in the buffered against it. They actually sold the GM shares for a gain. That gain's reflected in as other income as part of the deficit and debt management. So that's one thing that's in there. So it kind of gives you an indication that some of the gap action was, and they mentioned that as part of the budget cycle, that they were going to sell GM. The other thing to bear in mind too as well is that the first quarter, which started April, May, and June, reflected some of the recessionary time that we saw a drop in GDP. So the fact that they ran a surplus is good, is interesting, because we would have thought there would have been more pressure on other aspects of the economy, right? So I wanted to kind of bring that into perspective. So what I've showed you on this screen is the breakout of what the financial statements look like for a government. So the government generates a bulk of their income from taxation, which is corporate and personal taxes. GSTs, consumption taxes, and EI premiums paid as part of the employers. Okay, and the expenses they pay out are going to be normal, which is old age security, other levels of government, that's the transfer, EI benefits are paid out, and other programs. Okay, so as the government moves through with their plan for the rest of the year, they'll basically be looking at different things that they're going to drive it. Now, we know the economy is not for certain, but we do know some fundamental issues that we're seeing happen or evolved. One is the labor market's been quite strong since the complete fall of the oil prices. We've generated well over 100,000 jobs in the last year or so, which is a good thing in a roundabout way, and let me tell you that. Is if we were losing jobs, then there would be more pressure on EI payments, and we'd be reducing our impact from taxation on payroll taxes, and we're not seeing that's the indication there. The other issue that we're seeing happen is likely oil royalties will fall a little bit this year due to the oil pricing. We don't know the magnitude of that impact yet, but it could also put some pressure on the government revenues, and again, it's too early to say what that impact is. Another issue that's come into play, GST still looks like it's going to be pretty healthy, because consumer spending, which drives GST as part of the overall domestic market, is actually quite good. So that's actually showing you that they probably will hit their GST targets. Now, the other thing that comes into play at any government is the government will probably undertake some expense management cycles, which means they'll probably bring in freezes, whether it means expense freezes or delay some purchases till the following year as part of the expense management cycle. That likely will come into as part of them going through the year. The other thing that should drive this as well is the TD Bank is quoted as saying that they expect an uptick in the U.S. economy, which should also impact on corporate profits here in Canada, which should also drive corporate taxes higher than what they were in the first part of the year. So is it going to be tough for the government? Yes, it is. Does it mean they're going to have a $5 billion deficit? It's too early to say. If anything, they'll either break even, if break even is what the goal is Mr. Harper is going to do, or basically they might run a tiny surplus. Again, it's too early to say. We've only looked at the first 3 months of the year, but from what we're seeing in terms of the other indicators, we're also seeing a stronger pickup in the U.S. economy, which bodes well for Canada, because 75% of all our exports go to the U.S. So this kind of puts things in perspective, and I wanted to kind of put my spin based on my background, because I'm in finance and I look at the overall underlining drivers of any decision, and that's why I wanted to kind of clarify the position.